What is going on, traders? Welcome back to the Traveling Traders. You can see I'm in Mexico. Hopefully you can see that. I had to adjust the camera settings a little bit, and hopefully you can hear me over the party that's going on in the background. But today I wanted to talk about two vaccine penny stocks that could make you filthy rich. Now, I want to credit the Motley Fool article by George Budwell where I got some of this info, so I just want to cite it because I'm not a clown or a plagiarizer. However, in our trading group, I've actually traded both of these stocks before. And if you want access to our trading group, link is in the description below where I send out all of my stocks, options, and crypto plays. Without further ado, let's get right into it. So the two vaccine penny stocks that can make you filthy rich. Now, one of them is not exactly a penny stock, it's under $10. In order for it to qualify as a penny stock, it would technically have to be under $5. So one of them is, but both of them are under $10. Now, we're all familiar with stocks like Moderna and Novavax posting hundreds, some of them thousands of percentage point gains this year. And we tend to see random vaccine companies or random small pharmaceuticals pump. And I'm going to give my reasoning for each of these two picks. And then we'll go over the charts, of course, and I'll talk about the technical analysis behind these two stocks. The first stock, Biologics, or the ticker symbol HTBX. Now, this stock is working on a COVID vaccine, but the biggest piece of news potentially for this company ever is that last week it passed a proof of concept animal study on the vaccine. Now, the thought is this might pave the way for early human trials. And with that comes grant funding, which was the impetus for a lot of the pumps that we saw in this industry. Now, another thing that separates Biologics from other vaccines is its vaccine is meant to treat high-risk patients specifically, such as the elderly or the immunocompromised. And it is looking to fill a gap amongst a sea of more normalized vaccines by Johnson & Johnson, Moderna, AstraZeneca, Pfizer, Novavax. And he confirmed last week via email that it was already in talks with state and federal government agencies for funding. At a little over $2 a share, I'm definitely adding this to my portfolio. Now, keep in mind, this isn't a surefire thing. This is a pure speculation play. This doesn't replace building a solid portfolio. And by the way, if you want tips on that, I just released my top 10 stocks for August 2020. Check it out here after this video, of course. Now, our second stock, Vaxart, is trading a little over $9. We successfully swing traded Vaxart on and off in the last few months or so. Again, if you want access to the trade alerts, link is in the description below. But here is why Vaxart is looking juicy at the moment. It is in the process of developing an orally administered vaccine, and it was included among the government's Operation Warp Speed program last month. A lot of analysts see this as a precursor to getting major funding soon. So really, as you see, these two plays are based around the potential for funding in the future because, like I said, companies like Innovio or Moderna have really seen a major boost in their stock price after their funding has been approved. And the low price point mixed with the potential that we can make multiples on these stocks are also part of the attraction. Again, please position size accordingly. Position sizing is one of the most important attributes to trading, and this does not replace building a solid portfolio. Depending on your risk tolerance, obviously everybody's different, but you'll reserve a certain amount of your portfolio for riskier plays or swing trades. This would fall under that. And with these pure speculation plays, nothing is certain for sure. All right, and before we go to the charts, if you get anything out of this video, leave it a big thumbs up. I'm running my sweepstakes again where I will pick one of your comments at random and enter that play all in, whether it's a stock or options play. So leave a stock or options play that you would like me to enter on your behalf. And if I pick your comment at random, I will enter that play all in with my Webull account. There's about a little over $1,000 in there. And whatever the profits are, I will give it to the person whose comment I picked. So leave it in the comment section below. Let me know what stocks or options you want me to play for the sweepstakes. All right, let's go right to the charts. All right, guys, so here is HTBX's chart. If we take a look at it, you'll see that it is finding support on the 21 EMA, which this, as you know, I call it the great equalizer, especially on major rallies. We tend to see these stocks bouncing off of the 21 EMA after retracing. You see the RSI cooling off, which is exactly what you want to see before another potential rally. As I always say, the best 1-2 punch is when you get solid technicals mixed with fundamentals, such as the funding that I was talking about earlier, that might see the stock propelled to new heights. Even if it gets to its previous price point at $4, it essentially is doubling from where it's at today. So you are 2xing your money. Another thing that stands out is earnings are coming up. It says here August 17th. I don't know if that date is amended or not, but last time we saw a pre-earnings rally and then a rally after earnings. So if we have the news of government funding mixed with potentially decent earnings, you know, if it meets expectations at least, along with some of these other technicals that I'll discuss, then again, that could be an impetus for a new rally, especially bouncing off of here, off the 21 EMA. We also see that there is a hidden bullish divergence between the price and between the RSI. This is something that you definitely want to see on retracements. When a stock has hit a high and has retraced, you want to see this hidden bullish divergence where the price is making a higher low and the oscillator is making a lower low. As you can see back here, what date was this? Back here in May, the price was also making a higher low, and for that same period you could see the RSI making a lower low before eventually seeing a rally. So there's lots of things to like here. If you were really a prudent investor or trader and you wanted to take a little bit more precaution, you could wait until, you know, HTBX crosses above this central pivot point, which is at around $2.43, because we tend to see stocks, once they cross the central pivot point, then especially on rallies, it's very viable and very likely that they hit the R1 level, which is the first resistance level here. So if you were really prudent and a little more risk averse, you could wait to see if heat can get above this central pivot point here first. But of course, you are leaving some profit off the table. So if you waited for that point, whoops, what the hell did I just do? But if you waited for that point, you would essentially be leaving about 17% profit on the table. Really depends on your risk tolerance. There's no right or wrong answer. Do as thou wilt. All right, now let's take a look at Vaxart's chart, go over those technicals, and then I will leave you guys to it. So looking at Vaxart, they have earnings coming up around the same time. Actually, their earnings are this week. Like I said, we've swing traded Vaxart pretty successfully in the past. If you want access to the trade alerts, link is in the description below. But we are seeing the same divergence on Vaxart, which is a good sign. So you see this hidden bullish divergence where the price is making a higher low and the RSI for the same time period is making a lower low. Now that I'm saying that out loud, I'm wondering if I said that correctly with regards to HTBX. If I didn't, apologies, but the price needs to make a higher low and the oscillator needs to make a lower low for there to be hidden bullish divergence. And again, same thing, it's very close to that central pivot point. However, Vaxart has fallen below the 21 EMA, but we see that Vaxart tends to trend that way. It's fallen below the 21 EMA back in March before popping up. Then once it retraced, it fell below the 21 EMA back in June, and now we're below the 21 EMA again. So I actually don't, it's not a big deal if the stock that you're looking at trends that way. Trend is your friend until the end. So follow the trend and you'll be okay. Now, one thing that's worrying me a little bit more about Vaxart than with heat is that when it does fall below the 21 EMA, it tends to retest the 50 moving average. It did so in March. It did so again in April. It did so again, it actually tested near the 100 in June, and we are now below the 21 EMA, and if it retests the 50 MA, that divergence would still be there, but we'd be dealing with a $7 Vaxart, which if we bought now and it does retrace to the 50 MA, you'd be down around 23%, which is not something to thumb our noses at. The way that I would play it here is I would buy a little bit of Vaxart at a little over $9 where it's at currently. And then if it retraces to the 50 MA, I would buy some more to lower my cost basis. If I had to pick one over the other at exactly this point, I'm definitely a little bit more gung-ho about HTBX, but I will be entering both of these. Anyway, that is it for this video. Go ahead and leave it a thumbs up if you get anything out of this video. Leave it in the comment section below. Let me know if you're going to enter either of these. Also, let me know what stock you want me to enter in the sweepstakes, because I will be picking a comment at random and going all in with my Webull account, which has around $1,100 in there. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.